General Electric facing a federal probe. The Consumer Financial Protection Bureau investigating the company's retail credit unit marketing of what they call debt cancellation products. Now, you may not have heard of that phrase, but you've probably seen it in mailings. And our question tonight, are debt cancellation programs worth it? Here with more, John Ulzheimer of CreditSesame.com. Hey, John, first off the bat, let's just define what these things are, because you get them in your credit card statements sometimes, offers to help you out if you're having trouble paying.
Yeah, that's exactly right, Jerry. These debt cancellation products, it's a variety of services that are being sold as enhancement products with traditional loans or credit cards, and essentially what they promise to do is if the debtor goes through some sort of life-changing event, all the way up to dying, to losing their job or becoming fully disabled, that this insurance would then kick in and either cancel out the debt entirely or make the payment for a period of time until the consumer can get back on their feet and start making the payment themselves. And
you can understand why this would be attractive, right? Especially during the recession, a lot of people weren't sure if they were going to hold on to their jobs, if they could make that next payment. People, figured paying a little bit more every month might make sense. You say no. Why?
It doesn't make a lot of sense because think of how often you file a claim on your auto insurance. Not very often. Think about how often you file a claim on your homeowner's insurance. Not very often. It's going to be the same with these types of debt protection services as well. You're not going to get the value out of what you're paying into the program, essentially. And frankly, you would do much better as the debtor to take the money that you would have paid to the creditor to insure your debt and just go ahead and pay off the debt or lower the principal balance quicker than if you're just paying it back through the normal amortization schedule. But the problem is these are very, very profitable products, and they're very aggressively marketed, which is why the CFPB does not necessarily like how these things are being pushed. And this is not the first time they've looked into these types of payment protection plans, and it certainly isn't going to be the last.
Well, and so you might pay $30 a month, you might pay $40 a month, maybe $50 a month for this guarantee, but actually cashing in on that guarantee can be very difficult. The rules around it may be something that you didn't pay any attention to when you signed up for it. Tell me about the hidden risks of these policies.
Yeah, that's a very good point. At the beginning, you're right. The pricing is variable, so it's not one size fits all. It's generally based on how much of the debt you have is going to be what the price you're going to pay to essentially insure it. And the devil is always in the details with these types of services, and the exclusions are pretty considerable. Your age, the type of job you have, how often you go to work. In other words, if you're part-time, how many hours are you working? If you are voluntarily unemployed or involuntarily unemployed, these are all things that can determine whether or not you can cash in on this promise to have your debt canceled.
So a lot of people don't even qualify after they've paid into it, and then they've put money into this insurance policy that they could have just used to pay down their debt. So devil's in the details here, and the news is not good.
Yep.
Now, GE did make a statement to us here at FBN. Here's what they said. We've publicly disclosed these issues on our own and in detail and are working cooperatively with regulators. We're committed to addressing issues when they arise. We have strong controls and processes in place and work with all regulators to set a standard for consumer transparency. And you say?
Yeah, in all fairness to GE and the other credit card issuers who the CFPB has either come down on or are looking into, in many cases, they are not the ones who are directly marketing these services. They've actually outsourced that process to third-party companies who are paid a commission for the amount of sales they can close, which is a significant conflict of interest, because if I can sell something to you, even though I may not really think you need it, I'm going to make more money as the salesperson, and that's where these guys are getting in trouble, because these companies are acting as their agents or their proxy.
Well, I got to tell you, John, I don't have to wait for the regulators to rule. I'd say if you're being offered this, I'd forgo it. There's got to be a better way to pay that bill.
It's a thumbs down.
Thumbs down. John, thanks for coming on. Always good to see you. Appreciate your time. Thank you so much.